The Money Show, Stephen Grootes, is brought to you by Absa CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers. Good evening. Welcome to the program. I'm Stephen Grootes. Plenty to come. One of those days where SENS, the Stock Exchange News Service, just update after update. Early this morning, we had interim results from Absa, from MTN, from Thungela as well, a couple of others as well through the morning. Quite a lot going on in all of that, both Absa and MTN looking at a sort of restructuring. And I suppose the story with Absa that you'll ask, and we will ask when we speak to Fihla in just a moment, is why are you sort of restructuring after a restructuring? There was a change quite recently. So it's a fascinating question, but we'll speak to Fihla in a moment from Absa. We'll speak to MTN's Mupita as well about their restructuring. Thungela Resources suffering from lower coal prices. July Ndlovu on your radio in around half an hour from now. And we'll wrap the hour up with a conversation with the Minerals Council. They're very concerned about the sort of draft legislation coming from the Department of Mineral Resources. I do just get the sense that someone somewhere is provoking a fight, and I don't really know why. I mean, I would think that there are lots of different ways to start with law, and I realize it's the consulting process. But, I mean, at least start without trying to have a fight. And I realize sometimes government and businesses want different things. I get that. I mean, that's sort of the point. But there's got to be a better way. I was thinking a little bit about cell phones today. I had a call, I was sitting at home, I had a call this morning from someone I work with. And we had quite a long chat. And it was a normal phone conversation. And suddenly struck me halfway through that I'm fairly certain she's in a Wi-Fi area and I was at home, I had Wi-Fi at home, and we could be doing this for free. And I did sort of wonder what this means for the long-term health of what's really been a big revenue generator for some cell phone companies. I'm talking about the old-fashioned voice call. And yes, if you're outside of your home or outside of a Wi-Fi area, they'll still make money from a WhatsApp call, of course, through mobile data. But more and more, there are places where you can get data for free just by walking around. So I do wonder how that is going to change. Let me put the question to you like this. Do you think you could go without making voice calls? Finish and klaar, full stop. I think many people could. I think there are plenty of people who do. You just don't do voice calls anymore. It's all just WhatsApp. I know plenty of people who just say WhatsApp only. How long do you think you could go for? And under what circumstances would you still have to actually take or make a voice call? Also talking to your parents? I also wondered about that. 011 883 0702 021 446 0567. And of course, voice notes on WhatsApp tonight on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
Well, confirmation from the Absa Group today. It increased its headline earnings by 17% for the first 6 months of the year. Its return on equity up from 14% to 14.8%. The first reporting period under the new CEO, Fihla, is also announcing changes to the way he's going to manage the bank. And I'm glad to tell you that Fihla is on the line for you now. Kenny, good evening. Welcome back to the Money Show. It's been a little while. A strong first half to start your time at Absa. How do you feel about your first set of interim results?
Well, good evening, Stephen. I mean, it's quite encouraging to see that the momentum that was built by the business a year ago is starting to show positive results. It is definitely encouraging, and it suggests that some of the measures that were implemented by Charles and the leadership team at Absa ought to be seen through whilst building on additional measures that will take us to the next level. So I actually feel very optimistic and encouraged by what I'm seeing in the organization.
Your business banking earnings were below your expectations, and I was speaking to, I think he's a former colleague of yours last week. Their business banking division was also lower than expected. Is there something we need to worry about in our economy that's resulting in you having lower earnings in business banking in particular?
I think business banking is suffering from the overall sluggish economic performance in South Africa. In addition, within Absa, we had a specific impairment that was sort of supersized relative to that business, which tended to then worsen their overall performance. But I think the underlying sort of metrics from a client point of view remain solid. Their business strengthened its management team last year. They also added capacity to improve their focus on the client. We are starting to see some positive lead indicators moving up, but it is too early to say that business is starting to operate at the level at which we would want it to operate. But business banking, no doubt, is suffering from what is happening overall in South Africa.
So you think you'll be able to make more money in that segment going forward, even though you're only predicting, I think, 0.9% economic growth for South Africa this year?
We have to box smartly. We cannot be passive and expect to benefit purely through the increase in GDP. We have to be clever in terms of which sectors we want to focus on. There will always be areas that are still growing even when the economy is a bit sluggish. We need the agility within our business to accelerate our level of business activity in those sectors that are growing faster relative to the overall GDP. And we are building that agility, and the team is sensitive to that.
At your presentation today, as I understand it, you said you're going to move Absa into a pan-African operating model. There'd already been a change just a couple of months ago. That was the management team sort of before you. So now another change after that.
Look, I don't think it's as dramatic as it sounds. What was implemented previously was simply to rebuild our retail business into a single business unit, which was absolutely necessary because it was broken down into different components. So bringing together makes sense from a client point of view. What the change in the operating model suggests is that we should take this a step further. Instead of just focusing on business banking and retail banking on a pure localized basis, that we should also create a much more coherent view of these businesses across the different markets within which we operate, which is why we're using the word moving towards a pan-African model. It does not change or undo what was done a couple of months ago. It simply takes that to the next level. Those teams will remain in one place. What we are putting in place is an overarching leadership structure that will ensure that the strategic alignment across the different regions and that we're able to effectively extract value from economies of scale by looking at the type of investments that are needed that will benefit the whole footprint, leveraging best practice that happens in one market to the benefit of the rest of our footprint. The two are not contradictory at all. If anything, they are complementary.
You've had, Kenny, obviously a long career in another bank. You're now in Absa. How have you found it so far? Is there a different culture? Were you surprised by how different maybe it was?
Not surprised. I think given some of the leadership instability issues that Absa has suffered over the last couple of years, that has had a negative impact on the culture. When you do not have stability at the top, people tend to focus within their narrow areas, and therefore they become increasingly inward focused. No one sticks their necks out. Even the best of people tend to effectively keep their heads down. And that's something that we have to change, which is why stabilizing the leadership team, resetting the operating model much early in the process is absolutely important so that we can get the appointments out of the way and then rally the new leadership team to focus on the strategic direction of the organization, mobilize our people and make sure that we shift from being internally focused into externally focused. There is a lot of good quality people in Absa who are comparable to the best that you'll find in the industry. But unfortunately, even good people cannot operate at their best in an environment that's a bit negative.
Kenny Fihla, thanks very much indeed. The Group CEO at Absa.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
18 minutes after 6. Good evening. Well, big changes coming at MTN. The company announcing today it's going to have 3 major platforms: connectivity, fintech and digital infrastructure. That's on the back of much improved results for the 6 months to the end of June, particularly because the economic situation in Nigeria has improved. Rolf Mupita is the Group CEO at MTN. Rolf, good evening. Firstly, there are several factors you can't control that have affected your results over the last year, the Nigerian currencies for one thing. But you must be quite relieved at this big improvement.
Yeah, Stephen, good evening to you and your listeners. It's been a really pleasing first half of the year. We've always said that the business has very strong operational momentum in it, but as you trade in the macro can can take some of that shine off. What we've had in the first half is that the macro has been actually quite constructive. As you say, Nigeria, the currency has been pretty stable, 1,500 naira to the dollar. In Ghana, the cedi actually has appreciated from around 15 odd to 10, 11. Very strong currency appreciation on the back of gold sales in Ghana, and South Africa has been pretty stable. So when the macro is either supportive or benign, that operational strength that we see in our markets shines through, which is why you saw, the top line beating guidance. The earnings were very strong. Adjusted headline earnings up 76%. So this is, in the 8 years I've been at MTN, this has probably been the best first half set of results, and also a pretty clean set of financial results. So very pleasing.
The situation in South Africa is quite interesting. Your service revenue was up by only 2.3%. Your core revenue, obviously, we all know, under pressure. You saw a 2% decline in fintech revenue. Are you under pressure here at home?
Yeah, South Africa is where we're seeing the most amount of competitive intensity. In many of our markets, I think what we've seen is this narrative where you say market repair, where there's obviously competition, but everybody's kind of focused on ensuring that you have, there's a healthy free cash flow generation. South African dynamics right now, particularly in the prepaid market, there's quite a lot of intense competition. We took the strategy, which we believe is the right medium to long-term strategy, that says you got to provide some price ups on the prepaid side, because you're taking on these enormous costs. You've paid for spectrum auctions. There's a lot to put into capex. So, like in many industries, there's some amount of inflation passed through, which has never been in SA market for 30 years in the telco sector. So we did it. The guys in Midrand did it. But there's quite a lot of pressure between ourselves, Vodacom and Telkom. So there's a real battle out there on the prepaid market. So what we've said is we're adjusting our guidance in South Africa, putting a bit more investment around distribution, dealers, and so forth, to kind of win back market share. And when you win back market share, you should see the service revenue come back up.
We've seen, obviously, the demand for data just growing and growing, and that's helped you over the years. There's going to be, and we know this for various reasons, there's going to be a lot more fiber in a lot more places fairly soon. I realize people are always going to need mobile data, but are you worried that people might need you as MTN just a little bit less than they do now?
I don't really think that. I mean, the way we think about it is, the future is going to be the future where people are always connected, okay? Always connected. If you go deep into a forest, you go to, game reserve where there's very little connectivity, you're going to have high quality connectivity in future for sure. Now, how would that be delivered? You have terrestrial infrastructure like base stations, fiber, undersea cables, and you'll have access to non-terrestrial networks, these LEO satellites, and the phone will be looking to connect to the best form of connection. And so what we will continuously do, and let's take the home, for example, the fight for the home is not only about fiber, it's fixed wireless access. If you have sufficient spectrum, you can almost give fiber quality connection, and we have, abundance of spectrum in a place like Nigeria. We have 100 megahertz of the so-called 3500, spectrum band. And so to win the home, which is one of our strategies, it's a combination of fixed wireless access, as well as fiber. So we are going to, look at what is the right strategy for which markets and demographics. I mean, South Africa, I think, is a little bit different. We're not going to be investing too much around fiber. organically because there's a bit of a overbuild on fiber in South Africa. But let's see how that all plays out.
The restructuring, I don't know if that's the right word. The 3 platforms, I think, was the word you used: connectivity, fintech, and digital infrastructure. Why those changes? Why now?
Look, our Ambition 2025 strategy remains the right strategy as we look to the next 5 years. We just got to keep executing because the opportunity we see on data and fintech remains, really compelling, the structural growth trends. We envisaged a world, let's look to 2030, where what MTN is essentially kind of 3 platforms under one business that kind of controls it. Connectivity operations, they need their own capital. It requires these are capital-intensive businesses. We will always want to be a majority shareholder in that. As an example, you look at the fintech business, again, want to be a majority shareholder, but we will bring in third-party capital for strategics who can help us grow the business, as we've done with MasterCard. We'll continue to do that. And with digital infrastructure, the data growth we're seeing on the continent is enormous. I was telling somebody earlier that 8 years ago, Nigeria, the average usage of a Nigerian customer was 500 MBs. Today, it's 14.3 gigs. It's just a insatiable demand. So we're saying, let's organize ourselves. Let's start organize ourselves as these kind of 3 platforms going forward. Different business, different capital requirements, different skill sets, different risk profiles, kind of under one umbrella that is MTN. And so the management changes that you alluded to are a response to strategy, that strategic perspective, an assessment of the competitive environment, an assessment of the talent we have in our organization, and rearranging and positioning the talent we have internally to focus on the very specific priorities that were relevant to the management changes we announced.
And Ralph, very quickly, if you can, how worried are you about the US investigations into MTN in Afghanistan and sort of Iran?
Yeah, look, we set out quite clearly today the top of mind issues that we're working through these quite calmly, with good advice, with a good team that looking at them. The regulatory matters, I think I covered them fully in today's presentation. So if we go to the legal matters, I think there are 3 that we called out. There's obviously the Turkcell matter, where we have appealed to the Constitutional Court, and I think that's all in the public domain. Then there are these 88 cases that are in the U.S. There's kind of 5 of them. They've been ongoing since 2019, and these need to move from arguments of jurisdiction to actually the merits of the case. These cases are kind of substantially there in terms of we're still in jurisdictional. And what we announced to the market today is that we've received a request for information from the Department of Justice. We're voluntarily cooperating with them. They have not accused us of any wrongdoing. And we felt that, because of the position that we hold, we would engage them, and we've engaged also with the SA authorities along that. And so we thought stakeholders need to know that, and we'll progress and work with those litigation matters in a calm and considered way.
Ralph Mupita, thanks very much indeed. The Group CEO at MTN on The Money Show tonight.
The Money Show.
The Markets.
Siboniso Ngomalo is the Chief Investment Officer at the Old Mutual Investment Group. Siboniso, good evening. Absa, lots more changes to come, it seems, but we shouldn't overplay it, says the CEO.
Yes, Stephen. I'm actually going to, Stephen, can I just take a step back and connect some dots? Listening to the results, looking at the results last week, there's a lot of talk of restructures of some sort in South Africa. Why? If we just connect the retailers you've spoken to, we've given updates, and obviously now today it's Absa, etc. 1, South Africa as an economy is not growing, so it's really tough. 2, costs are always growing, costs are always a pressure, and so therefore when companies then can't deliver good profits, actually something's got to change. And every company that is reporting, especially the ones in South Africa, are reporting tough numbers, but they're also talking about how competitive it is, because there's no tailwind of a good macro. And so all of this, if we step back on it, it's a reflection. It's a tough environment. But let's talk about Absa. Yes, I think, first of all, I think Absa is lucky to have Kenny. Kenny's got an amazing track record. And actually, if you look at these results, there are some good and some telling things here. First of all, it's actually like Absa generally, if you look at its history, they've been pretty inconsistent about their guidance of telling us, okay, this is where we think about the future. But this time, actually, they've reiterated their guidance of what they expect for 2016's return on equity. That is rare consistency. And again, that's what stability brings in terms of leadership. Again, a pleasing result. And I suppose Kenny's being clear and straight with the market. And so he has to. And also, I suppose part of the restructures, if you listen to them, that management teams are starting to look for growth elsewhere, and the continent is becoming an appealing place that is a common pursuit of growth.
MTN's share price was down quite dramatically, despite on paper very good results. I was a little surprised by that, and the restructuring does seem to be quite well thought through.
Yes, Stephen. So MTN's results were fantastic. South Africa is obviously tough, but Nigeria and Ghana were the star of the show. The result, though, actually had nothing to do, why the share price was down had nothing to do with the results. There was some news that came out that the U.S. government has stepped up the probe in terms of MTN's conduct in Iran and Afghanistan. And obviously that spooked the market, that actually suddenly you've got the Department of Justice in the USA actually accusing MTN of some slightly scary activities in Iran and Afghanistan. And so therefore that's what then spooked the market. But the results themselves, very strong results, very strong turnaround in Nigeria and in Ghana. South Africa struggling though. And again, competitive, tough environment. And they've made some management changes in order to deal with that. And so actually that was also pleasing to see.
Sibonisa Ngomalo, thanks very much indeed. Chief Investment Officer at the Old Mutual Investment Group.
WhatsApp Stephen
on 072
702
1702.
Well, Mimi messaging this morning, for close friends and family, I still prefer voice notes. Call me old-fashioned, but I think that voice calls, she says, excuse me, she prefers voice calls. Call me old-fashioned, but I think voice calls give clarity, provide genuine connection in all circumstances. Imagine trying to express condolences. How would you convey genuine empathy? Absolutely, I'm with you on this, Mimi. I really do prefer a good old-fashioned phone conversation. Our WhatsApp calls fine, they're getting better, but just a general conversation. I know some people really don't like it. I think younger people almost feel, but why are you trying to do that? I don't understand. Is it an attack? Are you going to ask me a question? But I think a general conversation, does help. And I've always preferred that. I don't know if you have a view on that. I'm sure that you do, in fact, one way or another. And you might find that you prefer one thing and your children and your parents prefer completely different things. I wonder a little bit about that. 011 883 0702 and 021 446 0567 tonight.
The Money Show, Stephen Grootes, is brought to you by Absa CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers.
Well, with lower coal prices having a big impact on Thungela Resources for its first half, its interim profits down by 80%. Realized export coal prices in South Africa were down by 11%, but the group was able to produce more coal for export. Also says Transnet's improved performance is having an impact too. July Ndlovu is the CEO at Thungela Resources. July, good evening. Welcome back to the Money Show. You can't really control coal prices, and in the end, they had quite a big impact on you.
That's right, Stephen. We don't control coal prices, but what we control is exactly where you've just gone, which is we control production. And in South Africa, as you saw, we increased production by 4%, even on the back of a significant impact on two of our open cast mines, which were significantly behind. So I'm quite pleased with the performance and productivity improvement on Mafube and Zibulo and the ramp-up that is happening at Elders. We operated safely, which is quite important and very pleasing. And we continue to focus on improving our cost performance.
You say there's still very high levels of demand for coal, but people are now wanting to produce their own. In other words, they want energy security. I mean, that's going to continue going forward in a fracturing world. I imagine it'll continue to have an impact on you. Yes, you're producing high-quality South African coal. People don't want to buy it simply because they want to make sure they have enough resources at home.
The nature of the coal that is being produced in country, if you look at the key markets that we serve, India and China particularly, is lower quality coal and is not suitable for some of these power stations which are on the coast. And therefore, those power stations will continue to demand coal from the seaboard markets. That's the first thing. The second thing is that a lot of South African coal actually goes into the sponge iron in India. And that particular market segment is going to continue to demand coal that comes from this part of the world. So we see that demand continue to hold in the medium to long term.
Your own production was up by 4% compared to the same period last year. Can you keep increasing production? I mean, is there much more space?
Look, we're quite pleased with the decision we took in terms of strengthening our balance sheet, which allows us to invest through the cycle. And you notice in the results that we said we're going to continue to invest at Zibulo North Shaft to complete that project. We are ramping up Elders. And what those two projects will continue to do is, in part, improve our production to some extent, but actually extend the life of our assets. But I can also say, it's become a feature of our business that we continue to improve productivity year on year. I reported in March that we had improved productivity in South Africa by 11%. And again, this time we report that half on half, we've gone up 4%. I'm really hopeful that, we'll continue with that focus on improving productivity.
Transnet gave you a better service than it did last year. How important is that? I mean, are you expecting more from them going forward, that improvement will continue?
Thungela is an export business. Yes, we do have one mine which supplies the local market, but it's actually closing at the end of this year, which will make us predominantly an export business. Therefore, the performance of Transnet is quite important to our fortunes. So, seeing Transnet improve half on half by 5% is quite pleasing. And really, the work that they've continued to do in terms of fixing the rail, investing in maintaining the signal, maintaining the locomotives, bringing in more locomotives on the corridor, is beginning to deliver these incremental improvements that we're seeing. So that's quite pleasing from that point of view.
You're still convinced there's going to be long-term demand for coal? The business model, if you like, of Thungela Resources is still sound going forward?
I'm not the only one who is convinced. If you read the IEA coal report, their mid-year coal report, which they released in July, they say 2024 was a record year, and they're calling out 25, 26 to remain at those record levels. And they're now changing the language to say, going forward, we are now on a plateau rather than a rapid phase out of coal. So that says that there's still runway for good quality coal, and companies with good assets like we have got a structural advantage.
The Minerals Council, July, and we will speak to them in a moment, but they're clearly very concerned about changes to the Mineral Resources Development Bill, and I know you'll want to let them do most of the talking on that. But are you as worried about that bill as other mining companies are?
Look, it's concerning when changes to legislation are obviously done without adequate consultation, but I remain quite hopeful that the office bearers in the Minerals Council will engage with the department. And Minister Mantashe, despite all his posturing, has always been willing to engage with the industry. So I remain hopeful that we'll find each other.
Thanks very much indeed, July Ndlovu, the CEO at Thungela Resources. Well, we'll hear from the Minerals Council on that in just a moment. And there was a time when the Minerals Council was very, very angry with the Resources Ministry. That does seem to be easing just a little bit. I kind of like to hope that it would ease. There should really be a way for everybody to kind of come to some kind of agreement. I'm not entirely sure what it is that happens in mining specifically, where everyone keeps fighting all the time. I mean, I understand it historically, obviously, but still, there's got to be a better way than what people have been doing up until now.
702. Stephen is on the Money Show.
6 to 8 p.m.
Well, let's continue that conversation about the Mineral Resources Department and the Mineral Resources Development Bill. The Minerals Council today finally giving its comprehensive response to the draft changes to that. Previously, there had been a threat to go to court over it, or at least to engage robustly. Mzila Mthenjane is the CEO of the Minerals Council. Mzila, good evening. I mean, I remember
good evening, Stephen.
Your first reaction was sort of, you were quite concerned about this. Temperatures seem to have cooled a little bit. You now want to talk to the department. What do you want to talk about first?
Thanks, Stephen. Interesting that you should start from that point of departure of taking to court. But as you say, I think at the time when the bill was published and having just had a cursory review, our emotions were high. But I think with the benefit of time now, and we've spent a lot of time understanding the content of the bill, and we've had engagements with the DMPR. And I think you would have seen as well from the response that they gave of the erratum after we pointed out that I think what they published in terms of the provisions on prospecting rights is not what we had proposed. And with the common understanding of how risky prospecting is, it was important that it really be treated as a sensitive and an unfettered business activity like you would in any entrepreneurship. And the engagements that we've had recently with the DMPR have really been encouraging in as far as what we can hope for a bill that will encourage investment and growth.
So you believe the department is willing to talk to you. I presume you believe then that the Minister, Gwede Mantashe, is willing to change his mind in these issues. There's scope here for real substantive engagement.
No, there is. And I think what we also have to bear in mind is that the DMPR has been on quite an extensive stakeholder engagement session, and which included ourselves, community, other government departments, labor, traditional authorities, and a wider range of other stakeholders. So we're not necessarily saying our view is the only one that's important. But I think we're making it clear in terms of what will work for the industry to be able to perform and contribute effectively and efficiently to the economy for the benefit of all stakeholders. That's really what the essence of the conversation is about. And then addressing those key issues which we believe investors have really had a key concern about and will potentially have a concern about.
What if you were given a chance to sort of start this process again, and your main criticism has been this won't encourage investment, won't incentivize investment. We understand that South Africa's sort of share of global investment in mining has been decreasing, etc., prospecting to, for all sorts of reasons we can go into if we need to. But if you were given the chance as the Minerals Council of encouraging investment in South Africa, and you were looking at this law, if you were able to draft a law from scratch, where would you start? What would be the most important things that we need to get right to get as much investment as possible in mining in South Africa right now?
I think it'll be two areas. The first one, with the work that has started around the cadastral system, I would make sure that it's a system that is implemented as quickly as possible and works efficiently and effectively, particularly given the geological endowment that we have. I think we have a mineral deposits that are probably relatively more complex than what you find in other regions. So that, I think, would be important in terms of ensuring that when you apply for a prospect or a mining right, what you get is what you get to keep over the next 5 years, if it's prospecting over the next 30 years, if it's going to be mining. The second thing would then be the law itself. It needs to be absolutely clear what is expected of you when you invest in mining in South Africa, what is expected of you in terms of what you need to do and what you shouldn't do. Then the next thing in terms of the law is, I think, an efficient administration of the law, where the law states that you will get a prospecting right or a mining right in 80 days or 90 days, including a water use license, approval of your environmental management program in 90 days or 180 days, it will be 180 days or less and not more. So I think those aspects will provide for certainty as well as predictability. And I would also overlay with the fact that I would not want to change the law every time that there's a change in government. So perhaps what we've seen from other jurisdictions is establishing an independent body, a mining commission, a minerals commission, that actually also helps in coordinating various other departments in ensuring a very efficient administration of the law.
Mzila Mthenjane, thanks very much indeed. Do appreciate it. CEO at Minerals Council South Africa. It's interesting just to see how this process is sort of evolving. And unfortunately, for various reasons, I think the relationship between business, between the mining industry and the Mineral Resources Department just hasn't been as good as people wanted. And that's despite the fact that when Minister Mantashe first took over the department, it was energy as well at the time, there was great sort of celebration. This was someone who, as we all know, has a long history in mining, understands the industry. So there's a lot going on in this space. We'll talk cryptocurrency and the finance minister in a couple of moments. We'll find out also about artificial intelligence in Africa. Arthur Goldstuck's got a book out about it. And we will talk about bread, the process of baking bread en masse. In other words, breaking 1 million loaves of bread every day. How complicated that is, how interesting that is, and can the price of bread ever get lower than it is now? You're probably eating the cheapest bread ever made if you're eating bread, normal bread in the sort of modern day setting. But can it ever get cheaper? We'll try and find out. Good to hear from you on that this evening as well. Good evening, you're with The Money Show. It's 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Good evening, 7 minutes after 7 the time. Well, plenty to come in the next little while. We will be talking a bit about cryptocurrencies. There's a lot going on in that space at the moment, but not a lot of that happening here, or not a lot of it happening with sort of government sort of backing, let me put it like that. And then I made the point we'll be speaking to Cornel Vermeulen, the general manager for Sasco Bakeries, after 7:30. I think there's so many different questions to ask there. I was wondering if you'd ever worked at a company where there'd been too much change too quickly. And I don't think I ever have, but I've had plenty of people tell me how unsettling that experience is, that you come and you don't know what's happening the next day. You don't know what's going to happen the next time you actually try and do something. You don't know if you can do what you like. And I quite liked the point that Kenny Fihla made, that, even good people actually battle to try and do the right thing, to try and stick their head out, to try and have good ideas when there's too much change. I think that must be true. On the other hand, you don't want no change either. You really do need something to shift. I don't know what your view on it is, but I know you'll have one. Good to hear from you tonight on 011 883 0702 0214460567, and of course voice notes on 072 702 1702.
WhatsApp Stephen
On 072
702.
1702.
Maya Shwari saying, good day. Please consider raising the issue that cell phone service providers are servicing cell numbers which have not been recorded. The ID details are not checked, yet the service is being provided. It's been a problem for as long as I can remember. And in fact, when the RECA legislation came in, Maya Shwari, I remember everybody I knew making exactly that prediction. This is what is going to happen. And sure as eggs are eggs, that is what happened. Jeff saying, how do we tell the quality difference between a cell phone call, a VoIP call, a voice over IP call, or a WhatsApp call? On air, the best crossings were always dialed calls on Telkom copper cables. Jeff, the thing about a landline was that the quality was so much more consistent. You got what you got and you didn't complain, because there was no one to complain to. There was no one else to go to in those days. I completely agree. And I find it really frustrating. And as a presenter, I find it incredibly frustrating when we're trying to have a conversation with someone and I know I can't and you can't hear the answer. So I completely get you. It's one of those funny things. It's like the price of progress. You can listen to whatever music you want streaming on your phone on Bluetooth. It'll never be as good as a CD, because a CD is still, generally speaking, the best quality music that you and I have ever heard. I don't know if we'll ever hear better. So yes, things get better, and gosh, Jeff, they go backwards.
702.
702.
Stephen is on X.
At Stephen Grootes.
And if you're a vinyl fan, I'm really not interested in hearing from you. The Finance Minister, Enoch Godongwana, is saying in the answer to a parliamentary question that he will not yet change what is called Board Notice 90. It is essentially the proposal was, would he allow collective investment schemes to include cryptocurrencies? He says they're still viewed as risky investments. Marius Reitz is the GM for Africa for Luno, the cryptocurrency. Marius, I'm guessing, but I bet you have a different view to the finance minister.
Hi, Stephen. Stephen, currently crypto assets like Bitcoin is not permitted as an underlying investment asset in collective investment scheme products like ETFs and unit trusts. And just to put it into context, Stephen, many investors invest in the S&P 500 or in the JSE Top 40, and they do so through exchange-traded funds or through other investment structures that trade on the Johannesburg Stock Exchange. But if they would want to gain access to Bitcoin, they cannot do so through the JSE currently. So they would have to invest directly into Bitcoin. So either they have to hold the Bitcoin themselves, and they can do so through a crypto app, or they have to send the money offshore. So they have to utilize the offshore allowance, and then they can invest in Bitcoin-backed ETFs or unit trusts in the US, for example. In essence, South African investors cannot gain exposure in the way that they want to. They've got very limited options in terms of how they can invest in Bitcoin or gain exposure to the Bitcoin price. And the crux of it really is that investors want to gain Bitcoin exposure. The demand is clear and established for Bitcoin as an asset, and it's no longer a fringe asset. It's grown into a 2.3 trillion asset, and it's in the top 10 global assets according to market capitalization.
So I mean, I accept everything you say there, Marius. But I suppose the finance minister could also say, if people want to invest in it, that's fine, just not through collective investment schemes. And as you've pointed out, there are other ways for them to do it.
Yeah, I think that the irony, though, is, or our view at least, Stephen, is that we actually think it will be safer for investors if they can invest in a JSE-listed fund that tracks the price of Bitcoin. Could be a basket of different asset classes. Investors will enjoy the guardrails of a professional asset manager and also the oversight of the JSE. That the point is that investors will gain Bitcoin exposure, anyway. So it's much better to give them a product that's safe, that's regulated, that's listed on the JSE with proper oversight. To ensure that they are protected from scams and all other types of risks.
So, I mean, Marius, obviously the big argument is that look at the increase in value in cryptocurrencies, right? And I can see that. And I suppose the finance minister's argument might go like this. I'm not speaking for him. I'm just, a thought experiment. Is that he doesn't see what the assets are. Bitcoin is increasing in value because of increasing demand for Bitcoin, but there isn't anything behind it. Now, you could say the same for gold. The only thing behind gold is gold. But isn't that what the minister's worried about?
Well, I think at the end of the day, we need to give investors the opportunity to invest in whatever they want to invest in, as long as there's a track record, as long as the environment to invest in is safe and secure. Investors need to be able to make decisions to invest in asset classes that they want to invest in. In the case of Bitcoin, we spoke about the size of the asset class. In the United States, beginning of last year, the US SEC introduced or approved the first Bitcoin exchange-traded funds. Those funds have now accumulated $165 billion in assets under management. And you have global investment banks like Standard Chartered Bank, you have BlackRock, and the largest asset managers in the world that are offering Bitcoin exposure to their clients. So the demand is clear and it's established. It's a global asset class. Locally in South Africa, the Financial Sector Conduct Authority, the primary oversight authority of the cryptocurrency industry, has declared crypto assets, including Bitcoin, as a financial product. So it's enjoying that status. The industry is regulated, and there are world-class crypto asset platforms that operate in South Africa that are arguably much better equipped and that lead the way globally if you compare them to the global peers. So I think the South African regulators have done a really good job up until this point. They've been pragmatic. I think we're certainly leading from an Africa perspective. on things like AML, on things like ensuring that the crypto exchanges operate in a safe and secure manner. But I think at this point we risk wiping out some of the early gains that we as a country made. And one of the big missed opportunities, I also think, is it's firstly pushing serious sophisticated investors to invest their funds through offshore product providers, so into US denominated Bitcoin ETFs. It's withholding local industry from growth, job creation, and innovation, more importantly. And lastly, there's a high tax opportunity cost. So Africa's losing out on high tax revenues as well, and that contribution to the fiscus is also lost.
Marius Rates, thanks very much indeed. Luno's GM for Africa. Listening to that is Stephen Boyke-Sidley, a partner at Bridge Capital and professor of practice at the Johannesburg Business School at UJ. Stephen, good evening. Is the finance minister being too cautious here?
Yes, absolutely. I first want to say that Marius has hit all the major items over here. He has an exhaustive knowledge of the space. He's running a crypto exchange. I can be less polite than him because I'm not answerable to any of the authorities. I think that the South African regulations as concerns crypto have been a chaotic patchwork, which is where they sit right now. So we do have crypto having been declared a financial asset and falling under those regulations. We do have crypto service providers now having to get what's called a CASP license. We do not have exchange control regulations because the judgment was in May and the judge said you guys have had 15 years to prepare for it and you've done absolutely nothing, so people can move their crypto overseas without reporting to exchange control. And my understanding that billions are leaving South Africa because of that. Now, of course, the Reserve Bank is jumping to attention saying, okay, we'll get something done, but you know how long regulation takes. And the most important one, which you talked about, was the pension schemes, or at least the collective investment trusts, which are anchored by the big pension funds, which are worth trillions in South Africa, and they don't have access to any of this new asset class. Stephen, to your point that the minister may be nervous because there's nothing behind it, and Marius did indicate this, there is nothing behind gold. It's a shiny metal. It has very little use other than minor industrial use. The rand has nothing behind it other than the promise of a government to manage the money properly, and neither does the dollar. And what he says is entirely correct. People have the option or the discretion, should have the discretion to invest in whatever they think has value. And if the minister is going to allow investments in U.S. treasuries or in the rand or in gold, he should allow investments into cryptocurrency.
Could there be an argument that because of the nature of our society, the inequality, and just the fact that there are so many scams around in normal currency and cryptocurrency, that the minister has a responsibility, rightly or wrongly, to be conservative? And I mean conservative in adapting to things later rather than earlier.
Yeah, we can talk about the dangers to consumer by scammers and various other miscreants, which would be far, far lower if these things were regulated and there could be collective investment trusts which were managed by professionals and professional institutions, rather than forcing individuals to open up accounts where they are much more at risk of being phished socially and having their passwords stolen. It's much safer, and the institution is fronting you on that.
Stephen Boyke-Sidley, really appreciate the time. Thank you very much indeed. Partner at Bridge Capital, professor of practice at the Johannesburg Business School. Marius Rates, as you know, is Luno's GM for Africa. 18 minutes after 7.
The Money Show.
Business books.
Well, continuing in a similar but actually very different theme, tonight's book is The Hitchhiker's Guide to AI, The African Edge. It's written by Arthur Goldstuck, someone you'll have heard many, many times on The Money Show. Arthur, good evening. Congratulations on the book.
Good evening, Stephen. Thank you very much, and thanks for having me on the show to chat about it.
A lot written about AI, some of it previously by you. What do you mean by The African Edge?
I realized after I'd written the first book, which was subtitled A Handbook for All, that you can find out about how to use AI. You can get handbooks for AI. You can get guides to AI anywhere. But the one thing that's missing in most of these guides or books, or when you ask AI to explain to you how to use AI, they're not telling you how it's actually being used successfully across the African continent, where people assume that we are behind the times, that we're backwards, that we're not tech savvy. And what I discovered in my journeys around the world of AI was just how innovative the use of AI was across the continent and in every sector you can imagine, from sports to arts to agriculture.
Are we in Africa using AI, or could we use AI in a different way to other places? I mean, it would seem that in some ways it'll all be exactly the same. Won't we all be using it for similar things?
That's an excellent question, but is also, I believe, an excellent answer to it, which is something that I discovered while I was writing the first book, is that when you look at innovation in the heart of innovation country, which is Silicon Valley, it's all about what's the opportunity? How can we create a unicorn, a company worth $1 billion overnight? How can we make money out of this innovation? Whereas in Africa or across the African continent, the question is very different. The question is, how do we solve our problems? How do we address our challenges? Or how can this technology help us solve this particular challenge? So the way I sum it up is that in Silicon Valley, innovation is inspired by opportunity. Across Africa, innovation is inspired by need. Also opportunity, but that opportunity comes out of need rather than a gap in the market.
Sure. In a way, then, it perhaps becomes a lot more important for people in Africa to be using AI.
That's a very good point. It's precisely that. We should not be saying this is something that's being imported from elsewhere. We should be developing our own AI. Yes, we should, but at the same time, we should take advantage of these tools that are suddenly available to address our needs and to say this is the opportunity to, in fact, leapfrog what we were stuck with before.
Okay, so we know that things are going to change. Everyone keeps telling me the whole world is going to change. You include some guidance on how to use it and even when not to use it. Students, for example, should not use it all the time.
Correct. Certainly when there are rules against using it and you think, well, they can't detect AI, well, they can. In fact, I can look at a piece of writing and tell you if it was produced by AI. If a person producing that writing is very skilled at adapting it, then I won't be able to see it. But AI leaves a fingerprint, and in fact, many fingerprints. And you can often tell that something was, in fact, generated by AI. And in many cases, the person producing it doesn't realize that. So they simply take that output and present it to the client or the newspaper or whoever as their own work. And that's when the wheels sometimes come off. But the other context as well, for example, if you're a business and you've got confidential information and you're using a free version of AI, anything that you upload into AI or share with AI suddenly becomes public property in a sense, because the AI can then use that material to put together answers for other people.
So, I mean, obviously we know, and there are plenty of people who are worried about jobs. Writers are affected by this. Artists are affected by this. You talk about, the ability of AI to write a new opera, to perform a sort of new opera every day. And yet, I don't know if everybody's going to want to read, listen to, look at art that is created by AI. We say we want to right now. Do you think that we will always want to, or will there be something about the human touch that will still matter?
In fact, most people say that they don't want creative material produced by AI, and other people will argue, well, you don't know it was produced by AI. But the fact is that AI, by its nature, averages out the content that it produces. It looks for the lowest common denominator. In other words, if you're producing a piece of text, AI is designed to predict what the next piece of text will be based on the average out there. So it analyzes the world of content and it says, well, this is most likely the word that will follow the one that went before. And the result is what writers would call very pedestrian content, what most people would call average content. And the reader, looking for new entertainment, news stimulation doesn't want average content. And the same is going to apply in the world of movies as well. If one is very skilled at movie making, one knows what kind of prompts you would need to create a fairly decent movie using AI. But it still takes that skill of understanding the craft of movie making and not relying only on the AI.
You spoke about the need in Africa, and one of the great needs is to have more jobs, and particularly in South Africa right now, and particularly for younger people. Now, there are a couple of different ways of looking at AI. I think there are lots of people, including journalists, Arthur, who are in jobs and thinking, my word, there's going to be nothing for me to do, I'm done. There are going to be other people who are going to look at it very differently and say, well, this will just make journalism better in some way. So to sort of put an impossible question to you, no Googling the answer, please. Is it going to lead to more jobs in Africa or fewer jobs in Africa? And, I mean, are we just going to have a few people employed and being a lot more productive and most people unemployed?
In many sectors, it will destroy a lot of jobs. I was a lot more optimistic a few years ago that it wouldn't kill off jobs so much as change jobs or improve jobs, but I have seen quite a lot of sectors where people are finding it more and more difficult to find work because companies or publications, etc., are now using AI to do things like designing graphics, for example. So the graphic designer is in trouble. The data analyst who's not skilled at gaining insights from the data that they're analyzing is going to be replaced by AI doing that data analysis, for example. But there are many areas, even in those sectors I'm talking about, where AI will enhance people to become almost super producers of content, and they will be in greater demand. But the bigger question you asked, Stephen, is about job creation, and that's a massive challenge. And quite a few people have come to me to ask me what my thoughts are on how we can use AI to enhance jobs across the African continent, but especially in South Africa where we have such a massive unemployment crisis. So it is something that is being explored, and I believe that there are answers.
Arthur Goldstuck, thank you very much indeed. The founder and CEO at Worldwide Works, but speaking to us as the author of the book, The Hitchhiker's Guide to AI, The African Edge. Fascinating, isn't it? We'll talk to the man who bakes 1 million loaves of bread. That's next on The Money Show. It's just gone 7:30.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, we were talking about a fractured world just a moment ago. Lots going on in the Oval Office at the moment in the White House where Trump and Zelensky are meeting. European leaders, of course, went to Washington with Zelensky as well, the president of Ukraine. There was the big summit last week involving Putin and Trump, Vladimir Putin, of course, the Russian leader in Alaska. There's a lot going on, and I hate to say it, but I can understand why countries want to produce their own coal and don't want to rely on anyone else. And when you see what's going on at the moment, it does make sense to me that people do that.
The Money Show. How I make my money.
Well, at the start of the pandemic, I found myself in a car fairly often, fairly early in the morning. And on the first day of the lockdown, it was a Friday morning. You may remember where you were. You were at home, I know. And I was driving down a road I knew quite well. It was about 4 hours after the lockdown had started. It started at midnight. It's about 4 in the morning. And I was aware that everything was going to be quite different, and I felt quite unsettled about it. And I was a bit nervous about what was going to happen. And as I went past a petrol station, I noticed there was a bakery truck in the petrol station, as it was every morning, dropping off its daily delivery of bread. And I can't tell you how comforting it was to see that despite everything going on, there was this bakery truck, as it was in the same place every day, and it was delivering bread. And it was a reminder of how important bread is. Well, imagine running one of the massive 24-hour operations that produce a huge amount of bread in this country. This is what Cornel Vermeulen does. He's the general manager for the bakeries division at PepsiCo. So he's the general manager for Sasco Bakeries. Cornel, good evening. I really do appreciate the time. Thanks for joining us.
Good evening, Stephen, and thank you for having me. Yes, those were interesting days, certainly, and it also shows how we take bread for granted.
It shows you, I think, also how it's probably one of the first things most of us eat when we're babies, after our mother's milk. It's kind of one of the things that's next. You can mix milk into it, things like that. It's relatively simple to make for human beings, and yet it's so important, I think.
Yeah, critical. It still remains today the most affordable meal solution in terms of everyday consumption, and that is bread.
You started in the finance field. You studied finance at varsity. And is that what you wanted to do as you were coming to the end of school? Was there something about doing those kinds of qualifications that really attracted you? Was there something about numbers or the possibility of running a business, perhaps?
Yeah, look, Stephen, I've liked numbers all my life, but I grew up in a small town, Robertson, in the Boland. And in a small town, there's only 4 big positions that you aspire to become. It's a doctor, a lawyer, an accountant, or the dominee. I chose the accountant route. So I studied at Stellenbosch, and in the end, accounting landed me into the food industry as well.
The Boland was very different then, wasn't it? I mean, people now talk about what's happening in Stellenbosch in particular is sort of wow. Then it was a very different place.
Yeah, I think it still is a special place. So it's developed a lot, but the Boland is still a very special place. Looking at the rugby from yesterday, so it's also going well on the sports front.
Where was you were growing up in the Boland? Where was your first job? Was it a student job or was it in something financial already? Were you getting some time in someone's office?
Yeah, so after Stellenbosch, I've joined PwC. I did my articles with PwC, and by servicing a customer, I've also landed the job of the customer. At the time was Pioneer Foods.
I've spoken to plenty of people in this segment, actually, who've done exactly the same thing. Was there something about the business, such a wide-ranging business, of course, Pioneer Foods, or was there something about the product that interested you, or was it just a good offer at the time and you were a young person looking for a good offer?
No, of course. I think one of the big things was the great brands. A lot of legacy brands sitting in Pioneer Foods. It's not only Sasco, but it's also White Star, it's Weet-Bix, it's Pacomo. So I think those brands is something that I've grown up with, as most of South Africans did. And that was the allure, working for a company that's got respectable brands. And I think that was the biggest allure, and of course it was a very easy decision to make in the end.
You also work for a logistics firm and at a Move Fuel. I mean, those are quite different businesses, aren't they, from food?
Yes, it's vastly different, yeah. So I did sort of do a stint with Imperial Logistics and managed a company for them. From the logistics side, I've moved into petrochemicals, which was a family business that transitioned into becoming a corporate. Vastly different, but I think it also tests your skills and develop your capabilities by working for a service company, which is a logistics company, and then moving into another industry and trying your skills at that, which is a service company, and is also delivering a specific product that's in South Africa still needed on a daily basis, which is fuel and petrochemicals, oil and lubricants.
I mean, it's one of those things where you can either work, I mean, a lot of businesses are 9 to 5, and I imagine most of your work was sort of 9 to 5 or I don't know, 10 to 6 or something, but I mean 6 to 6. But there are some businesses where you the whole company is kind of in that field and therefore is always on. Like, you're probably not getting many calls at 3 a.m, but the whole company is kind of geared that way. Things need to be done properly and on time all the time.
Yeah, I think the bakery business sort of really tests your muscle in that regard. It's a 24/7 business. We work 24/7. It's always on. It works like a clock. There's now trucks leaving, trucks delivering somewhere in the country bread to make sure that tomorrow morning when people wake up, they will have their fresh loaf of Sasco available for their daily consumption. So this is like clockwork on a daily basis. We work on a tough routine. Obviously, strategy is key. But on a daily basis, we look after those specific touch points that makes the strategy work and come to life.
Do certain problems crop up just because it's kind of always on? You literally, I mean, some businesses can maybe have someone not at a post for a couple of hours. You can't. You need to make sure someone's there doing what they're supposed to do all the time over quite a large operation.
Yeah, Stephen, I think the nature of the product, it's a perishable product. So it's always fresh. You have to deliver on a daily basis. And you started the program with that, is that people has taken the availability of bread for granted. And that really sort of puts a lot of challenges in our way to make sure that people are not disappointed on a daily basis with their daily bread. So yeah, it comes with a lot of challenges, a lot of dynamics, but a lot of satisfaction when you get it right as well.
You worked for a couple of big companies, Pioneer Foods, obviously South African, PepsiCo, part of a much bigger parent company. Have you found any difference in cultures? I mean, when you've moved from one company to another, from food to logistics to fuel, back to food, did you notice much difference in the sort of company culture?
Yeah, there was differences in the culture between the companies. I think the biggest fit for me was between Pioneer Foods and PepsiCo as well, where it is a huge focus in terms of the people culture and engagement about people, consumer centricity, and being true to your values. I think it makes it so much easier when you can align the company's values with your personal values as well. And that is something that has also appealed to me from Pioneer Foods and now PepsiCo as well. In terms of the South African context, we all sort of born and bred into a certain culture. And I think I've always valued the integrity part of most of the South African companies.
Did you find that you could sort of tell the culture was the same when you went to different offices around the country?
Yeah, not at once. Obviously, you need to sort of get into a certain culture. But there's a vastly difference between having a service offering, which is the foods company, and having a service focused product offering that you have, which is the logistics company. And also in petrochemicals, you've got a product service offering that you have. So there's vastly a different approach to that as well. And with that, it comes a different culture or a different attitude as well. But I think in terms of the South African context, we work hard. We try to impress and we try to sort of improve continuously. And I think that's for my career at least, that was the golden thread between all the companies I've worked for.
I was thinking a little bit today about the technology behind the production of bread. And yes, it's thousands of years old, but the way in which it's produced at the volume at which you produce it. I mean, the first thing is you use a lot of heat. And I presume, well, I don't know, I presume quite a lot of that heat might come from electricity.
Yeah, I think it does indeed. Some of it comes from electricity, some comes from other sort of energy sources as well. So the whole process is sort of designed to work with different sort of elements of heat. It's steam, it's oven fuel that we use, different aspects of electricity across the plant. So you have your chillers, you have your boilers, you have your compressors in your plant. So it's really energy intensive. But we've learned to work with that, specifically in South Africa, with coming from a long history of load shedding as well.
I mean, what do you do for backup power? I mean, I can't imagine there are many generators that could produce the heat that you need.
Yeah, look, at first we weren't not ready for it, but over the years we sort of established our own infrastructure in terms of providing energy resources for ourselves. I think it's also a big focus from the PepsiCo side in South Africa as well, that we sort of created a footprint for ourselves and building blocks for ourselves that we can become sort of self-sufficient in that. And I think one of the big objectives that we have in South Africa for PepsiCo is to be 100% dependent on renewable energy by the year 2030. So we've really invested in that part of our business.
Do you think it's harder for your business to do that than other businesses?
It is, I think, because you're always on. I think we had to deal with load shedding when it was on a specific schedule. It was a bit easier. But then there was also infrastructure challenges at some stage. You had to be ready for that. Obviously, technology helps you in that regard. It protects your equipment. But as I've said, in the beginning it was tough, but we learned to live with it. And we sort of we embraced the challenge. And currently it's not a big issue anymore for us in our life.
And the price of bread. So bread at one point you would have, be produced singly for families. When you had bakeries, they would produce maybe at the most 500 loaves of bread. The volume of bread that we produce now has brought the price down dramatically from where it was. it's probably fair to say that you can get bread for a cheaper price now than ever at any time in human history. Is there any scope at all to reduce the price further, or is this as low as you think it can go when you look at the ingredients and the costs and the human hours and all the rest that go into it?
Yeah, look, Stephen, I think inflation is a reality of life, and there will always be inflation. I think that because of all the variables that we know in terms of the macroeconomic environment as well, we challenge ourselves on a continuous basis in terms to become more productive, to become a low-cost producer of bread. Scale is very important in that regard, as you've mentioned. But we really sort of, on a continuous basis, challenge ourselves, create discomfort in the space of reducing overheads and making sure that we become more efficient. So we've got an internal program, for instance, that we call RECON. It means resource conservation, and it includes waste management, energy efficiency, and water efficiency as well. And that is very important for us. As I've said, we've got sort of steep objectives to be for 2030 in terms of energy efficiency. But in 2024, for instance, PepsiCo South Africa became net water positive. And what it means is that in South Africa, we are replenishing more water than we are consuming. So that means in sort of rivers, we do a lot of good work in terms of how we look after the resources of the country. And then in terms of the energy space, we do sort of audits on our plants to sort of make sure that we have no leakage in terms of our energy, whether it is steam or air that goes out. And that goes for our whole processes to create that discomfort and productivity to make sure that we can keep costs low and our product affordable.
We're speaking to Cornel Vermeulen, the General Manager at Sasco Bakeries, on his money, his career, tonight on The Money Show. It's 10 minutes now to 8.
The Money Show, Stephen Grootes, is brought to you by Absa CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers.
The Money Show, how I make my money.
Cornel Vermeulen is the General Manager at Sasco Bakeries. In other words, he's responsible for baking roughly 1 million loaves of bread every day. Cornel, when you are running an operation like this, and it has to work, I mean, it literally has to work everywhere all the time, you must have quite an amount of redundancy in all different ways. You will need backups for people. Firstly, probably in case someone is sick or someone is not well or something happens to someone at work or whatever it is. You will need backups for electricity. You'll need backups for equipment. How do you manage that without it becoming too expensive?
Yeah, you try to be more proactive on a daily basis. As I've said, you've got your strategic focus that you need to look after, and then once the strategy is established, I think you have your daily touch points, your weekly touch points, and your monthly touch points. But it's all about good people. I think it's about engaging the team. And if you look at our advertisements and what we stand for from a marketing point of view, we talk about the people who care make things better. For us, it's more than just a marketing campaign. It's something that we truly believe in. And then we took it a bit further because if somebody asks you what other things that you do care about, all our people, shop floor, frontline managers, everybody in the business should be able to talk about that. And the things that we care about is our people, firstly, our planet, our customer, our consumer, and our communities. And that's really the higher focus that we have for our business. And within each of those, we have specific KPIs that we want to achieve. I think if you have that higher purpose for your business or in life, I think it makes it a bit more special, and it gives the people, everybody in our business, definitely the drive to make things better.
You do have competition, quite a lot of it sometimes. Do you have to keep an eye on what they're doing as well? You need to sort of know what they're doing and how they're doing it and how you would keep up with them?
Yeah, of course. I think we are blessed with good competition in South Africa because good competition makes you better as well. So I think so that's a privilege to be part of this industry in South Africa and to have really, really high standards in terms of the baking industry and have strong competition as well. Yes, we do have.
Do you spend a lot of time? I mean, do you eat any of their bread just to see what it's like and what could maybe be improved? You don't have to answer.
Well, there can only be one loaf, Stephen. That can only be a Sasco loaf.
Okay, then. There is, it's a sort of, I say it's a movement against bread. It's not really a movement against bread. But I noticed, I think I saw somewhere that you have a master's in future studies. And I wondered if you looked at the question of how what we are going to eat may or may not change. And I started this segment by pointing to how important I think bread is and has been for so many years for human society. But that doesn't mean it'll be like that forever.
Yeah, no, that's true. I think in terms of the core range for South Africa, which is still white and brown bread, I think that's a pretty big part of the industry. But there are growing trends, and people are changing their lifestyles. And I think one of the biggest lifestyle changes that we see across all food categories is actually a more healthy lifestyle. In Sasco, we also have to pay attention to these things, and I think we are well differentiated in that specific channel. For Sasco, it means it's our low GI range. So people don't talk a lot about those low GI range, but we are the market leader in terms of the specific breads. It's different than the conventional process of baking, but these low GI loaves we manufacture in bespoke plants, which is sort of dedicated to just doing these lifestyle brands that we do have. So if you talk about bread and you think about bread, I think it speaks to, the first thing that comes to mind is fiber, which speaks to gut health. But in terms when you speak about a low GI bread, it speaks to a lot more than that. So it's a slow release of energy, which help you with weight management. It could help you with heart disease management, but also it's good for diabetics, sort of keeping their blood sugar levels in check. And then a part of it is that in terms of the ingredients, we really have sort of really smart ingredients that goes into this. So we've got the honey and oats, we've got the cranberry loaf, and we've got the seed loaves. And all of these products that goes into the loaves of bread also gives you benefits in terms of antioxidants. So it's a really good loaf in terms from a lifestyle concept or healthy lifestyle point of view. And they are really, really tasty as well.
You can stop the selling. This also opens up all sorts of opportunities for what the future of bread looks like. Bread with a lot more things. We've seen that over the last 20 years. Bread without certain things. And all of that you can charge a premium for. So in other words, it's not just white or brown bread, it's bread with this.
Yeah, absolutely. It comes with all the benefits that I just mentioned as well. But also we have to sort of make sure that we keep sort of ahead of the curve in terms of this. I think that's one of the big benefits of being part of PepsiCo, a world organization. So we can scan the market, we can reach out to our colleagues across the world to look at new trends, maybe specifically to baking as well. And I think that's something that we are proud of. We just launched a new product in Gauteng in July this year, which is a snack bun. Which is really sort of a bun and roll, or bun that we look at and we fill it with a fancy filling. Now this product is a ready meal solution. It's a snacking solution. It provides commuters the opportunity to grab something early in the morning, especially for those guys that have to start early and have to be at 6 o'clock at work. But it's also a great lunchbox solution in terms of what we're trying to do. But this is a result of sort of scanning the market and finding products that could be fit for the South African environment as well and circumstances of the consumers. And we're very proud of the product. It's doing very well for us. As I said, we're in the early days of it and just launching Gauteng. But those are some of the benefits and things that we can do in the market.
Cornel Vermeulen, thank you. General Manager at Sasco Bakeries.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
The Money Show with Stephen Grootes is brought to you by Absa CIB, backing the Ideas Fund by advancing capital to African infrastructure investment managers. Well, of course, fascinating just to talk a little bit more about bread, the history, but also the future of bread and where things are going from here. How often during the week do you have bread? I try to cut down myself from time to time, but I find that most people I know do have bread at some point. Just to update you on what's happening in the US, the Dow Jones is down 0.02. The NASDAQ is absolutely flat. The S&P 500 is up 0.02 at the moment. One of those days where I think markets are looking for direction. They'll probably be looking to some corporate results in the US and then to central bank governors gathering during the week in Jackson Hole in the United States over the course of the week to find out a little bit more about how they're feeling about inflation. Could strangely be a big week for Jerome Powell. We'll be back with you tomorrow on The Money Show. Good evening. It's 8 o'clock.